Emergency update by ASAP. A jaw-dropping rally is incoming where the VIX is getting crushed.
Scarter Money Vest, get ready for another jaw-dropping rally here on Wednesday, April 23rd. As pre-market, markets are looking very, very strong on this continuation from yesterday's gains in the market. We were in a bear market as of Monday for the Nasdaq, and S&P 500 was in a deeper correction, but we are seeing some very nice relief rally here on comments from Besant on the de-escalation between the US and China in the near future, and also Trump on Tuesday saying that he never had any intentions of firing the chairman of the Federal Reserve, Jerome Powell. So you got lots to discuss in this market update here. As pre-markets, we're seeing significant momentum for across the board for a lot of risk-on rally here. We've got Robinhood up over 7.5%. Tesla, after the earnings, is up over 6.4%. As Elon Musk also mentioned that he's going to be stepping away from Doge, and the amount of time he's going to be spending at Doge is going to reduce significantly in the coming weeks. You got SoFi up over 6%. Palantir is almost back up to $100 right now, up over 5.7. We got Nvidia up over 5.2. $104 is where it's trading right now. We got Meta, AMD, SMH, Apple, QQQs, Microsoft, Google. S&P 500 is up over 2%. QQQ is up over 2.65. The Bitcoin firing off all alerts here, back over $93,000. Not to mention some of the more leveraged plays. BITX is up over 4.5%. Pre-market SOXL is up over 9.4%. I've been accumulating this quite a bit in here, inside this rectangle over here. And of course, not to mention TQQQ. I've also been building a position in this. I'm going to be selling some calls here very soon, up over 8% pre-market. Back.
I was muted, sorry. Please don't sell calls. I was planning on this being more of a news video, not a selling calls video. Let me just double check. Let me go back, make sure I heard him correctly.
Back over forwarding a position in here, inside this rectangle over here. And of course, not to mention TQQQ. I've also been building a position in this. I'm going to be selling some calls here very soon. Up.
Fuck, don't do this. One of the things that set me back the very most in options in my entire life, honestly, was selling calls and selling puts. Please, for the love of all things good, don't ever sell options. Don't ever sell options. The risk return sounds so great, right? Oh, you can have an 80, 90% win rate. I had those 80, 90% win rates. But the problem was one trade, one losing trade would take me 6 to 12 trades perfectly executed to make back. Okay, I wasn't playing. I thought this was going to be more of a news video, but I am not advocating selling calls on anything. Not at all. No way, Jose.
Up over 8% pre-market, back over $48, $49 per share. So you got lots to discuss. Make sure that you drop a like and subscribe to the channel. And again, link's going to be down below if you're interested in joining our MoneyVest platform. There is an additional 30% annual discount, brings it down to $20 a month. You get access to all the Discord channels, trade alerts, members only videos. So he says on Tuesday, and this was one of the reasons why the markets were rallying so aggressively after hours, is he has, quote unquote, no intention of firing the Federal Reserve Chairman Jerome Powell, none whatsoever. And he wanted to clarify that he did not seek Powell's removal, never did. The comment represents a dramatic shift, as we already know that this has been Trump versus Powell for quite some time. He's been posting on Truth Social, calling Jerome Powell.
Look, I don't want to get into politics because you guys have told me many times, don't get into politics. But did he not actually say Jerome Powell needs to pack his bags, he's about to leave? I don't understand that. I have no idea. I did get to see Jerome Powell in person in November. That was cool. But yeah, I don't understand this.
Names and, and forcing the Federal Reserve to cut interest rates. He's Mr. Too Late. And again, just really putting the pressure on Jerome Powell to cut interest rates. And so this is a dramatic shift, who has recently ramped up his rhetoric against Powell and declined to rule out the possibility of taking unprecedented steps of firing him. And Jerome Powell also has retaliated by saying that under law, Trump cannot fire him, and his sort of term ends in May 2026. So he says, and I quote, "No, I have no intention of firing him." That's about as clear as it gets. But again, it is Trump, so you never know the volatility of these comments, and it can be back and forth. But he goes on by saying, and I quote, "I would like to see him be a little bit more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates." This is about as polite I've seen Trump regards to Powell in a very long time. So that again is obviously good news for the market. And this was another catalyst driving this market higher with de-escalation in the US-China trade war. That's exactly what everybody wants to hear. Global markets. When I'm talking global markets, I'm talking
legit. This is exactly what everyone wants to hear, right? Nobody wants to have to pay 125, 245% more for their goods, right? I've said this many times, but probably every single thing in my eyesight was shipped in from China. I don't want to pay double or 2.5 times as much for every single thing from now on. That's certainly not going to help. Not going to help at all with inflation. Corey, I'm really trying, dude. I'm really trying. But it is, part of what's moving the market right now. So it's part of it.
Equities, fixed income, so that's credit markets as well as foreign exchange, crypto, gold. Everybody wants to hear the word de-escalation, because if you remove the D and it's only escalation, then this market is trending lower and lower. So we certainly want to see de-escalation between the US-China trade war. As I mentioned before, Treasury Secretary Scott Bessent said in a closed-door meeting on Tuesday that there will be de-escalation in the very near future. Very near future could be months, could be weeks. We don't know, but it's coming, right? It's on the cards. Negotiating with China is likely to be a slog, Bessent said at a private investment summit. And he also added that nobody thinks, or neither side thinks, the status quo is sustainable. So which is where we are right now. Obviously, nobody thinks that we're going to be here for a long time. It's just not sustainable. And this is exactly what I mentioned in my previous updates as well. This is not a sustainable future for two of the biggest countries in the world having triple-digit trade duties on each other. It's going to halt the entire world in terms of supply chain, in terms of global trade. It already has. A lot of these companies have already made decisions to halt trade between these two countries, and that's affecting pricing, it's affecting margins, it's affecting capital spending, it's affecting every single aspect of running a business and running a country. So this is certainly not sustainable. And, this is what I mentioned in my updates as well from April 21st. So I sent out multiple updates in the Discord, but I really want to go over this once again to help you understand where I stand in terms of, what my thoughts are with the current market environment and what I'm planning to do moving forward. But before we get there, so this right here was also that came out. President Trump says tariffs on China will come down substantially and he won't play hardball. I'll take it with a grain of salt. I don't think there's any source for that. And President Trump.
And dude, the thing is that like we've all seen it. We're all living through this at the moment. Is that he says one thing and then immediately says something else, right? And maybe this is negotiation tactics. But like if we boil it down to where is the market going from this, we have no idea. We have no idea, which is why volatility has been so high, which has been why so many people are scratching their heads, pulling out their hair, and they're like, why are all my trades that I put on not winning, right? And so yesterday we had somebody come on the live stream and they were, I felt that when I read their comment at the time, I felt that they were very disgruntled because it's like, well, Chris said to have a half ATR as your stop loss, and my stop losses keep getting hit, and I keep getting taken out, and then the stock's going on without me. And dude, right now, I'm not buying anything. I wouldn't buy anything with your money. That's how much I wouldn't buy anything in this market. So, yeah, it's just a really tough place to be. And when that happens, you can just hold cash. You can just hold cash. In fact, somebody in our Discord had a brilliant observation, and they said, listen, if the master key is locked up for bullish and the master key is locked up for bearish, give it just a second to load in. If the master key is locked up for bullish and master key is locked up for bearish, the trade is cash. The trade is cash. The market's telling you we don't have a confluence of signals. We don't have what we need to see to go either direction. So the trade is cash. And sometimes, instead of listening to these other YouTube channels who are screaming, you got to buy this, you got to buy that. There's an opportunity here. There's an opportunity everywhere. On this kind of market, the opportunity is just not putting your money at risk. So it seems like it's all about Trump and China today. And truth being, that's what's causing these sort of crazy moves. So we do have to throw a little bit of politics in every once in a while.
Trump says he has no intention of firing Federal Reserve Chairman Jerome Powell. So this, of course, is true and correct. But the first headline, we have to take it with a grain of salt with what is going to happen, because it's been back and forth, right? It's been very back and forth. On some days, we feel like, okay, things are improving. And then China retaliates, the US retaliates, and things get worse. And then once again, we're seeing things to de-escalate and things to improve. And the markets rally. And then the following day, we hear something else. So it is a very, very volatile environment. However, the long-term path is this right here, as I mentioned before. So it is very, very simple. We just have to focus on two things, which is time and severity. So time is going to be how long this trade war is going to go for. Severity is how severe it's going to be. And right now, this is an extreme severity because we have triple-digit tariffs on both countries, China for the US, US for China as well. And so when you add these two things, long and extreme severity, of course, that leads to more market weakness and longer and deeper bear market for S&P and Nasdaq, and also leads us down this road of a potential recession as well. But if this is going to be short-lived, as Bessent also commented, that there's going to be de-escalation in the very near future, and this is not sustainable, so these tariffs are going to come down, that is the good news. That is the great news the market's pricing in. So short-lived and low severity of this trade war leads to higher probability market moves moves up and starts to recover. That's exactly what we're seeing a pre-market right now. In either scenario, however, I do not believe that there is any probability, at least in my view, that we see a fast V-shaped recovery. We might still see very nice days. In other words, these jaw-dropping rallies of the Nasdaq up 3-4%, individual stocks up like 7-8-9%, which is incredible, but that's still not going to lead us into this massive V-shaped recovery back to all-time highs. Why is that? Because, in my opinion, we're certainly not going back to where we were in January of 25. Earlier this year, when there were no tariff announcements, when things were moving and functioning really smoothly and really well between US and China, we're certainly not going back to those times. But we're also,
I think it's important to keep this sort of levity about the situation, right? Is that none of us know, not a single person on God's green earth can tell you that they know what the market's going to do. No way. We can have some ideas, right? We can see which direction things are going, but we don't actually know what the next thing is going to be. And that's why risk management is so important, right? We can hope for the best, but we have to plan for the worst. Right? Hope for the best, plan for the worst. And hope is not a strategy in trading, right? I think it was yesterday's video, or it was the Joseph Carlson one we did, where dude was talking about how he had been just absolutely monkey hammered on stocks like Meta, stocks like SoFi, stocks like what's another one he talked? Google, right? Absolutely monkey hammered on these type of stocks. And he's like, now is our redemption. Now is our redemption with earnings. It's like, what are you doing? This is the wrong game. This is the absolute wrong game to be looking for redemption. Because, like, just sit back, relax, wait for your signals to come, take action, wait for your exit signal to come, take action. Right? It doesn't have to be exciting. If you're trading and things are exciting, you're trading too big, or you're trading too often, and you're not going to be in this game for very long. It's just a fact. Hope for the best, plan for the worst, just like marriage.
also not going to be where we are. So when you understand that those two extreme scenarios are out of question, meaning that we're not going back to where we were, and we're certainly not going to be where we are, what we are going to carve ourselves is a little bit of the middle ground where compromise is going to happen, concessions are going to take place, and there's going to be some kind of negotiation between US and China with a de-escalation fashion that leads to a slow and steady and a very nice recovery for the market as a lot of these companies and trading partners get accustomed to this new trading environment. Because there's at least going to be some tariffs in place. It's not going to be eliminated down to 0% once again, like it was back in January of 2025. Although Biden did put on some tariffs on China, which were still there, but we're certainly not going back to those levels again. There's certainly going to be some Trump tariffs that are going to be there. And when that happens, this is going to be a new environment for trade. So while things are getting better from where we are, things are not going back to where we were. So carving out a middle ground is going to lead to a nice little recovery. It's not going to be back to all-time highs, in my opinion, anytime soon, but eventually, I do believe that we're going to get up to those levels. So, as I mentioned, long term, I do believe that these are continuing to be very, very strong buying opportunities. And this was on April 21st, not only because the risk reward is looking very attractive. Each passing day, the market goes down. But also, I mentioned this specifically, also that eventually I do believe that Trump will blink. That's what I mentioned because a lot of the markets, bond market, equities market, foreign exchange market, they're all voicing their concerns, right? So I also said that think of this as the market's way of voicing their concern. And the longer this goes on, the more pressure that puts on the administration to pivot. That's exactly what's happening right now. As the stock market struggles, as the dollar struggles, as bond markets struggle, as yields are pushing up, all of this is putting tremendous amount of pressure on Donald Trump, on Bessent, on the administration to pivot. And that's exactly what we're seeing now. They're starting to really pivot. And in my opinion, Trump and administration can't see the stock market, the bond market, as well as the dollar perform so poorly for too long. So if this goes on for too long, the markets will continue.
I agree with that. I've been saying that for a hot minute. I think that, well, we've all seen this. Politics aside, Trump is a very scoreboard person, right? He wants to look at something and say, look what I did. I am so smart. I am a genius. Joe Biden could never do that. Hillary is jealous that I did this, right? He's that type of person. And no matter what side of politics you're on, you can agree with that. He's not going to let the stock market go down while he's president, right? He's just not going to, because he's not going to let his legacy be recession. He's not going to let his legacy be anything but new all-time highs every single day. It's going to be tremendous. And because of that, I really think that he's trying very much so to make sure that doesn't happen. Okay. Which is good, right? If you want to think about it from a macro perspective, I think that's good, right? We want somebody who wants that scoreboard because that helps our bottom dollar, right? That helps our bottom line. That helps our wallets. Now, one thing I wanted to point out was I am very much seeing how the market breadth inside of Outlier is a leading indicator. Very much. And I want to show a couple spots to just really prove that point out. So we're going to be looking at, we'll start in 2025. So on December 26th, we had a bullish crossover here. December 26th, we had a bullish crossover. And if we go to the SPY, December 26th was, December 26th was here, right? Now, it took a few days to really level itself out, but then the market continued on up to new all-time highs. And then we had a bearish crossover here on January 29th. So leading indicator up to here. January 29th was here, right? Another leading indicator to say, watch for the pullback. Watch for the pullback. Now, what we measure here in market breadth is how many stocks are on our bull list versus how many stocks are on our bear list. How many stocks have buy signals versus sell signals. And I'm telling you, this is exactly how the market works, right? Let's talk about why these really seem to be working as well as they are. It's because if you're getting more and more people screaming buys, more and more buy signals coming, that is going to raise the average of the market, right? If you have 500 stocks and you have 490 of them being bullish, what do you expect the market to do? Go up, right? But at a certain point, we've run out of buyers. And if we've run out of buyers, what's left, right? These buyers turn into sellers and the cycle repeats. So that's why we can see these cyclical moves here in the market breadth. And then we had a bullish crossover on March 17th. And I'm telling you, the receipts are on YouTube. I said, I think we're going to have a short covering rally. That was on this candle right there, on this candle right here. What happened? We had a short covering rally. And a lot of people FOMO'd into this, thinking that was the bottom. But then, we look over here on market breadth, that short covering rally went away by March 28th. March 28th came on here, and the market's telling you, hey, you know what? I think we're about to go down. Market breadth literally told you right here, I think we're about to go down. And we did. Bullish crossover happened on on April 11th. And this was part of my thesis to say we might have hit the bottom. You can go back, check my two Sunday videos in a row. I said, I think we might have hit the bottom. And so that was on this date where the next bullish crossover happened right here. And then what's happened since then? It's pretty much sideways until this morning. We're going to open up around here. So we'll have to see if that holds, right? But having this data at your fingertips is going to be invaluable. Does it predict the exact top? Does it predict the exact bottom or the turning points? Not with perfect precision, but it does give you an idea of how the tide is changing. How the tide is changing measured in humans, okay? Measured in this human emotions. This is exactly what we're trying to represent here with the market breadth chart. And I think it's tremendous. I think it's tremendous. So where I'm going with that is I see a lot of bullish case. I see a lot of bullish case right here. Then I also see double order blocks down here. And we don't have that buy signal on the SPY just yet. But when we get the buy signal coming through on the SPY, I would say hold on to your backside. Hold on your backside. I think we're about to rip higher. Will we have a V-shaped recovery like after COVID? I don't know. I think people got way too used to V-shaped recoveries since then. But we'll have to see. We'll have to see how that plays out. So let's do this. I saw some questions in the chat, and I want to take a couple minutes to answer these, if that's all right with you guys. Theo says, Chris, I created the 10, 20, and 50 on Outlier, but you should put indicator color coded on geometrical to remind us which EMA it is. I didn't see any such indicator. So here in Outlier, you can, this is new in 3.0, you can add the indicators over here. And so, for example, if I wanted to add an indicator, I just select that and then select the color. And then I could come over here and see which color is associated to which one that I've already done. So you should be able to see that, Theo. Phil had a question. If it updates during the night, do you place your trades in the morning or at the end of the day? So for me personally, I only trade at the end of the day for a couple of reasons. Number one, that's the most liquidity. That's the most liquid part of the day every day. Here, I could even show you on a chart. That is the most liquid part of the day every day. So if I go to a 5-minute chart, where does it spike up? At the end of the day. or a couple spots here and there that had some liquidity. But at the end of the day, consistently is the most liquid part of the day. Consistently is the most liquid part of the day. Consistently is the most liquid part of the day. And liquidity matters. Liquidity matters because if you can't get in, you can't get out. And if you can't get out, you are stuck. I've been stuck. It sucks. I have been stuck in stocks that I did not want to own. There was nothing I could do about it because I had nobody on the other end of the trade. So that's one reason why I like to trade in the last hour of the day. Basically, last 45 minutes, last 30 minutes, give or take. Also, it helps me when I'm looking at history, especially like backtesting. Like I spent a lot of time backtesting yesterday. It helps me know where I got in because like anywhere in this candle or that candle or that candle, anywhere you could get in or get out, right? So if you got in at 11 a.m. versus 2 p.m. versus 8:30 a.m., right? Any one of those spots you could have got out. And that's difficult to keep track of if you're looking at a chart. So I'm only looking at the close. So then I can actually go back and say, okay, I know where I would have got in or where I would have got out. And that helps a ton. And like in my backtesting results yesterday that I'm going to show in just a minute, like I didn't have to stress because I could just type in the date and then let Google Finance find the close price. And it's ballpark in that area. And then it also helps with lifestyle, right? Because then I don't have to stress, what time do I need to be at my computer? I just part of lifestyle, right? Just do what I'm going to do all day and come back at 2:30 p.m. Central Time and make my trades. So I find that to be really useful in a lot of different ways. JG, I did not see the question. If you don't mind dropping it here in the chat, I'll try and answer it. Manny, missed the Professor G video, but you got to watch it. Okay, cool. That's awesome. Katie says, do you use the TTM squeeze indicator? No. The only indicators I use are the 10, 20, 50 on the chart. Then order blocks. Yeah. Order blocks, which we do have built into OVTLYR as well. You can see a couple of order blocks here and there. And then I use the ATR to help calculate position sizing and volatility. That's about it. So basically the OVTLYR data, but on my charts, ATRs, moving averages, order blocks. Josh, good morning. All this green is too good to be true. Waiting for Trump to announce. Yeah, he changed his mind. We'll have to see about that. Carol says, tempted to FOMO, but the master key still locks me out. Right. This is honestly the simplest thing you could do as a trader is have OVTLYR and look at the master key. Pull up any stock and look at the master key and say, okay, is it locked up bullish? Is it locked up bearish? Now is probably not the time to be getting in. Now let me prove to you just how important it is to let the master key tell you when is the time to get in, when it's not the time to get in. And real quick, let's do break down what the master key is. This is something that I figured out about, I think it was May last year once we figured it out, and my returns exploded. First, the SPY signal in OVTLYR. Is it a buy or is it a sell in the market? And we want to find that because the market's telling us which direction it's going. Do we have a buy signal? Okay, cool. That means the market is potentially the ability to go up, right? Not that it's going to go up, not that it's perfect, but it's telling us that more than likely it could be going up. Next is the market trend. Market trend meaning when we're looking at the moving averages, so I'll just zoom in here a little bit. When we're looking at the moving averages, we want to see the OVTLYR trend template stacked in our favor. That's the 10 EMA, the 20 EMA, and the 50 EMA. If the 10 is over the 20 and price is over the 50, that's a bullish trend. If the 10 is under the 20 and price is under the 50 like this, it's a bearish trend. So when we have a buy signal, a bullish trend, and then breadth, we talked about breadth earlier. What that means is how many stocks are screaming buys and how many stocks are screaming sells, right? We want to maximize that. We want to have not just the market, but also the sector. And in our new market breadth dashboard, this is so much easier than it used to be. I personally like to look at the full stocks. So the 2,600 stocks we cover, you could look at the S&P 500 or any other sector, but now we can see the crossover here. Let's go to the 10 EMA. On the 10 EMA, that's what I was looking for earlier. But that helps me know when things are crossing over. So the green line is the number of stocks on our bull list with buy signals. The 10 EMA shows you where those crossover points are. And then this is so sick in 3.0. This is a new widget over here. It shows you how every other sector is. And you can add a 5 EMA cross or a 10 EMA cross. and they're the same right now. There are no bearish sectors. So just looking at this, we have all the sectors are bullish and all stocks, when you look at that list, is the full market list is bullish. So while this is bearish, this is bearish, this is bullish, this is bullish. So we don't have a confluence of signals. But when they do line up, let me show you how crazy things get. So these are all of my trades from last year. There are 49 of them starting on May 7th. And this spreadsheet is available in our Discord. If you go over to the live stream links, I think I put it right there just to make it easy for you to find. Yeah, make it easy for you to find. And in fact, the 4 live streams I did yesterday doing backtesting to prove this out, those are all there too. So you can follow that. And we're going to make those a replay that'll come out this afternoon. What I did was I found the ones that were still, because the OVTLYR 3.0 and 2.0 data, there are some differences. So what I was looking for are the ones that still lined up as if I could put it on as a 3.0 trade versus a 2.0 trade. And looking at these, the yellow are ones that the heat map wasn't quite there, but I didn't take. White ones definitely didn't take. Only the green ones are ones that I would take. So we're going to just focus on those. So these are the ones that I would have taken using the OVTLYR 3.0 data. Let me make this green because it'll drive me crazy if I don't. So looking at this, wait a minute. Hang on here. Looking at this. Oh, I think the results could have even been better. It looks like I missed one yesterday. How about that? Okay, I'll have to worry about that in a little bit. Let me reset this. Okay. Looking at this, theoretical $100,000. And like I say, I obviously skipped one yesterday on accident. Theoretical $100,000. If you just wait for the master key, sit in cash and don't F up. If you just wait, look at this. Using 10% of your portfolio. So basically, not taking 10% of risk, but 10% of your portfolio. So starting with 100,000, putting on a trade with a portfolio size of $10,000. By the end of the year, like I say, I missed one right there. But by the end of the year, you would have a $177,000 account, a 77.61% gain, which actually will be even higher when I fix that. But then if you used 15% of your account, so $100,000, you put in a $15,000 trade, not that you're risking 15,000, but that's the size, portfolio size equivalent. Last year, my average was 15.68. So this is actually a number I could say is realistic. The returns were 144%. Right? Is that right? Yeah. Hang on, just cotton pick a minute here. Hang on, just a cotton pick a minute here. Let me select all, go down. Be a little bit easier to see here. So yeah, $144,000 of gains. That was not highlighted. That's why it wasn't shown. Which gave 144%. So you could risk 10% of your account, not risk 10%, 10% portfolio size and get 77% of gains. Or you could do 15% portfolio size and get 144% gains for the year. Now, what does that look like? And how many trades, Chris? You can't be serious here, Chris. You can't be serious. This is in, how many trades was that? 17 trades. In 17 trades. 17 trades. So for those of you thinking, I have to trade all the time if I want to make incredible gains. In 17 trades, you could have a 77% return using 10% as position size. Or in 17 trades, using 15% as position size, you could have 144% returns. Now, I'm not saying that that's going to happen, but that's what the numbers look like if I run this. Now, I was waiting for the SPY to have the buy signal. Okay? When it had a buy signal. Also, when the market breadth was bullish. Also, when the sector breadth was bullish. Also, when the market was trending higher. Also, when the stock was trending higher. And also, when the heat map was trending higher. So the heat map is this value right here. This value right here. This shows you if investors are getting more fearful or more greedy. And I really, really, really like that. So I use this as exit points and entry points. And so what I'm just trying to get across here is just sit in cash and don't F up. Sit in cash and don't F up, and you can have tremendous returns. What do these look like here? On OVTLYR 2.0, on all of them that I would have taken, my win rate was 61%. In 3.0, my win rate was 88.89%. 88.89%. 88.89% win rate. Average win, 2% on the stock versus 3.5% on the stock. Average loss, 2% versus average loss of 2%. So roughly the same. But your expectancy, meaning each trade that I put on, how much can I expect to win? It won't happen every time. But the expectancy in 3.0 is 2.88%, meaning putting on a trade when the master key is lined up yields a 2.88% expectancy on every single trade on the stock. Now, let me make this more better. Let me make this monkey donkey more better. I really appreciated the monkey donkey memes yesterday. Somebody asked this yesterday, and it's such a great idea. If you go over to the OVTLYR trading room, you can see every trade that I put on for years, they're in here. And then you can go to the live stream links and cross-reference those dates with the date that I made the trade, and you can actually see me in process doing it. Now, if all goes well, we'll be trading real soon, real quick. I'll be very, very happy about that. Do you want to make money or sell short calls? Yeah, Steve Burns said that exactly to me. I was explaining to him what I was doing in trading. He said, Chris, I used to trade like that too, but then I realized I wanted to make money. It's just a fact. What is the risk level between short selling versus puts? I assume you're talking about buying puts. So if you're short selling, you have unlimited risk, right? If the market goes up and you're short selling, like it's basically like the short call that we talked about earlier, you have unlimited risk to the upside. But if you're buying a put, you're only putting out, let's say, $1. And if it goes down, you can make all kinds of money. If it goes up, you're only out $1, right? So very different risk profile. When the market's sideways, you can still generate return with short calls. Absolutely. Absolutely, you still can. It's just not my style of trading. Absolutely, you can. What should we be doing now to be prepared for when the time comes to trade like this? I would absolutely open a paper trading account. You can get a account with Tradier. That's our recommended broker. And when you open an account with Tradier, it does give you the option to, when you log in, it says open live account or paper trading account. I would paper trade the mess out of this. I would start paper trading every single day, figuring out what that looks like and how that works. And of course, we're not going to leave you out in the cold. If you go out to our Discord and go to the VIP Investors Toolkit, there's an incredible video that I did not make, but it is by far the very best options trading video I've ever found.
Right here
it's nearly 3 hours long. This is from Chris Butler at Project Finance. I actually have talked to him in real life before, and he explains everything that you're going to need to know about trading options. So I would definitely start there. So listen, we had an opportunity to go through lots of cool stuff on this live stream. So be sure to come back this afternoon. I will not be in tomorrow. So tomorrow we won't have any live streams, but I'm not leaving you out in the cold. We are working on a special episode where I went through chapter by chapter of New Trader, Rich Trader, telling you all of my notes, everything you'd want to know about how to go from a new trader to a rich trader. You don't want to miss out on that. And that'll be on tomorrow. But I will see you in this afternoon's live stream. So click one of these videos YouTube is recommending right now. I'll see you soon.